Hello, traders. This is Orlando for Tradimo, and welcome to today's Daily Edge. We're going to start by looking at the news that have hit the wires today, and today it wasn't a big. There was no big impact events. So what we're going to do is we're going to go right to the DXY chart, and we're going to look at what we were watching yesterday. I mean, if you would join us yesterday, we were looking at a big rally on the US dollar. Now, let me just refresh my chart, and that's it. We were looking at this. We were looking at the break above 97.70, which is a huge level because that is the level that was capping the DXY to the upside. And not only that, but we also broke with that triangle formation, the yellow triangle formation. Now, it is very important to notice that once we broke above the 97.70 level and we closed above the 97.70 level, and now we are moving above the 97.70 level. If you look at my chart and you see that white line that I draw, that is the white line that I draw yesterday. And I'm expecting, and we're expecting at least a test of the 98 level again, if not the 98.30 level again. All right. So right now, the US dollar is in a bullish move, and we are going to be analyzing the markets and looking for setups and hunting for setups according to that. All right. Um, and the reason is that because there's really no big news coming out today. So volume coming in and on the US dollar, and buyers coming in on the US dollar and moving the US dollar higher is going to have big repercussions on a lot of assets. So let's go to the charts. We're going to keep it simple today, guys. And the reason we're going to keep it simple is because we are going to take well, we're going to see what we were watching yesterday. All right. And we're going to start by looking at gold. All right. And I mean, the reason we're going to start looking at gold is because this is the level that we were waiting for a deep buy. And the reason we were looking at this level is because, as I told you yesterday, we were in a very bearish structure, right? And when we hit the 1269 at the 12 between the 1269 and the 1265 level, which is the lower uh, gray um, rectangle on my chart, we bought gold. Okay, and we took profits at the next level of support, and the next level of support was between the 1286 and the 1288 level, and that was a level of high volume. There was a point of control, a historic point of control, and a historic and that was a level of historic high volume being traded in this market. And then we broke to the upside, and now we moved down and we are testing these levels again. Okay, now on the premium community, we already took a buying gold, and the reason we took a buying gold is because this was the level that we were waiting for, and two, because um of because what we are aiming at is a bullish continuation in gold. And the reason we are aiming at a bullish continuation in gold is because of this big bullish candle that broke with that area of resistance. And I don't know if you follow gold closely, but we do. And the rejection of that level was massive. There was a lot of sellers, and there were a lot of sell orders here. There was a lot of volume traded between the 1286, 1285, and 1288 level, and there was a lot of buying pressure trying to sweep all these sell orders, and then, well, buyers to control, and we broke with these white structure in my chart. And not only that, not only we broke with the bearish structure, but we broke with the previous high, which is the 1294.50 level, that I have noted with the smaller gray rectangle on my chart. Then we tested it again and we tried to buy here, but price came down. And now, not only we are testing the previous level of resistance as support, but we are testing exactly that white trend line. So, what I'm looking at right now, and I don't know if that makes sense to you, what I'm looking at right now is a continuation in this precious metal. So, um, we are looking, or on the premium community, we already in a buy. We are already in a buy um, trade, and what we're looking at is at least. I'm sorry. I'm going to grab a horizontal a line, and what we're looking at is at least a test of the 1294.50 level. So I'm going to make this a little bit thicker. All right. So what we're looking at, or what we are expecting, or what we were expecting, was a test of the broken trend line, a test of this area of support that right now is being tested as resistance, and a continuation of the bullish move. So, but the reason that this is interesting is because not only we are going to try to ride this bullish move to the next area of resistance, which is the previous the previous area that was broken, but a full bullish continuation in gold. And the reason is that we have broken with a very structure that we were trading in. And if we look back in price action, for example, let me grab a rectangle here. If we look at past price action or historic price action, we see that the bearish moves are they were very strong, and then the rallies were really choppy, and then again moves were very strong. And now we have broken this structure, and that gives us an idea that we might be on a complete turnover on this market, which means that we might be on a big bullish run. Now, let me just delete these two rectangles that I just grabbed, because I'm going to go to the daily chart. And the reason I'm going to go to the daily chart is because I want you to see this. All right. What I'm looking at right here is this. A break of this bearish structure, a continuation of the bullish move, at least a retest of this area, the 1299 level. And the 1299 level is going to be a very, very big or a very, very strong area. And the reason that is going to be a very strong area to break is because, one, we had a base here. When we broke to the upside, we found buyers, and we went all the way up to the 1341 level, 1341 level. And then we came back down. But here is where we found a lot of buyers. And if you follow my analysis, you know that back in what was it in February, when we were trying when we bought gold right here there was a lot of volume being traded, and there was big money stepping in. All right. So not only that, but if you look closely, let me thicken this out for you guys. If you look closely, this is where the bullish run after we broke with the bearish structure ended, and then we moved to the downside. So if we go back to the 4-hour chart, this is exactly where we want to be buying gold. And because we are aiming at a big continuation of the bullish move and not only a day trade or a short-term trade, I mean, we stops below these lows or even below these lows. And the reason we're doing that is because we don't want to get stop hunted. All right. So, in my opinion, even though the US dollar is rallying, and even though the US dollar and gold are inversely correlated, it doesn't mean, I mean, because of the US dollar rally, it doesn't mean that the price of gold is going to drop. Um, in my opinion, this is a great area with a great risk to reward scenario for a mid to long term trade. And well, a continuation for at least the 12.99 level. Of course, that we are going to be I mean, if we rally and if we break above the 12.88 level again, which is this red dotted line right here, if we break above, we are going to be watching the 12.94.50 level for a reaction. But if we do rally, I do think that we might go higher in gold. So let's go back to the US dollar. All right. And if you see what's going on right now, this is the 4 hour chart on DXY. And if you see what's going on right now, the US dollar is rallying. I mean, the US dollar has broken, finally broken with the 97.70 level, and it's rallying. All right. And I mean, this rally above the 97.70 level is what brought gold down to retest the broken trend line and to retest this area of previous support. All right. So if we don't break with the previous low, in my opinion, we are still looking at a bullish market in gold. All right. If you have any questions, Ish, just ask them on the chat, and I'll be more than happy to answer. So let's continue and let's take a look at the pound. All right, at the pound versus the euro. Yesterday, we were looking at the 27.95 level, which is the last purple or magenta dotted line, and we were looking at some struggle between buyers and sellers. All right, and we didn't. I mean, if you weren't with us yesterday, what I was looking at is maybe a pullback to this area for a short opportunity. But as you can see, I mean, we broke, and we broke with this area, and now we are down like 47, 48 pips. If we go to the daily, if we go to the daily chart, to me, this is extremely, extremely bearish. And the reason this is extremely bearish is because, I mean, if you grab some Fibonacci retracement levels, and I'm not going to grab some Fibonacci retracement levels, because if I do take a Fibonacci retracement level, it's going to be from this low to this high. And because we made several, we made two separate higher highs, that Fibonacci retracement level is not valid. All right. But this level, the 27.95 level, was important, not only because this is where, after this dip right here, we found buyers and we made a higher high. And not only that, but you can see right here that this was an area where buyers were found it last year in August, September, and October. So the pound just broke below the 27.95 level, and now, in my opinion, I mean, for me, there's no trade right now. But the area that I'm looking is this one right here, the 126 zone. All right. So let me just correctly put uh, the 126. So the area that I'm looking at is the 126. In my opinion, there is no trade to be made right now because let's go back to the hourly chart and I'm going to show you why. All right. The reason that, in my opinion, there's no trade to be made or there's no setup, it's because if we were to short right now, if we were to short right now, what we were doing is just chasing the move, and the risk versus the reward is not there. So basically, what I'm looking at, let's go back to the 4 hour chart, maybe the daily. What I'm looking at is just a reaction to the 20 to the 126 level. All right. For the time being, we remain flat on the pound because we were unable to catch the move, but uh, when and if it hits the 26 level, we are going to be looking at that closely because here at the 26 level, we might have a great um, a buy opportunity on the pound because if you look closely, after we hit the 3173 or the 3170 level, the move has been ultra bearish. All right, with just a consolidation around the 130 level, and then again a flush. There hasn't been a correction, or yeah, there hasn't been a correction that we might, well, a deep correction to a level that we might have taken a short. All right, so because of the strong bearish move on the pound right now versus the US dollar, this is the level that I'm looking at, the 26 level. All right. For the time being, so I'm going to delete these two lines because these were yesterday's lines, and of course, this is what's going on right now or today. And next week, what we might have is just a dip around the previous lows, around the 2690 level, and then a correction to the 2795 level. If we correct to the 2795 level, that would be a great opportunity to short the pound because the risk versus the reward would be great. I mean, from the 2795 level to the 26, we're talking about a 180 pip run, and maybe a 50 to 60 pip stop loss. So we are going to wait for a correction to the 2695 level, or a flush to the 126 level, to maybe get an opportunity to catch a falling knife and a buy trade to the 2795 level. Yesterday we were looking also at this nice level on the pound versus the yen. If you follow me and if you follow my analysis and my trades, you know that the pound versus the yen is one of my favorite currency pairs to trade because of the deep moves that it has. All right. And we were looking at this Fibonacci cluster yesterday, and we actually put on a buy stop order above the previous highs. We didn't get filled, and because we broke to the downside, because the pound is flushing, we deleted that pending order. And that's the reason that I use pending orders or buy stops, sell stops. All right. It's because, the setup looked great with two rejections, a Fibonacci cluster, and if we go to the daily, you can see that it was a previous area of a previous base. All right. after a big bearish move of around 500 or 600 pips, we found buyers and we moved up for around 800 pips. So that level was important if we're speaking about historic price action, and the setup looked great. But in order for me to take that buy trade to to retest the 142.50 level, we had to break with these previous highs. Then that's why I use pending orders. There were a lot of people, a lot of traders that saw these Fibonacci clusters, that saw this level, saw the rejections, and they just bought at market. And what happened? They got stopped out on a loss, and the reason is that they were buying prematurely. This, yeah, they were buying prematurely because the setup was not developed. All right. And now that we have broken to the downside, let me go to the daily. Now that we have broken to the downside, for me, there is actually no trade. I see no levels. Maybe the 138 level. All right. Yeah, maybe the 138 level is a level to be looking at. But let me just delete these lines from yesterday, and I'm going to zoom out because after breaking to the downside, I'm looking at a or a sell opportunity. This is looking absolutely bearish. So what I want, or what I would want, is a pullback to the 140.40 level for an excellent sell opportunity, because um, if if price pullbacks to this level, and we're able to sell at this level, the reward the possible reward would be around 200 pips, and the risk would be around 80 pips. So that would be a great risk to reward scenario if price pulls back to this level. For the time being, we remain flat on the pound versus the yen, and we are keeping our eyes on this possible pullback. And the reason that I think that we might pull back to this level is because of the high volume that was traded here and the importance of that level. Once we broke to the downside, um, momentum traders are going to give up easily. They're not going to give up easily, but Momo traders usually take the breakout, and they take 30, 40, 50, 60 pips. And when sellers close their sell orders, that is that gives that creates a bullish pressure in the market. So if these momentum traders start closing there or start taking profit, I think that we might have a pullback. I don't think it's going to happen today, and but at the beginning of next week, we might have a pullback to this very important area, and this is where I'm looking to sell. Now let's go and let's have a look to the US dollar Japanese yen. Yesterday, we were talking about the US dollar Japanese yen breaking to the upside above the previous highs, all right? And we were talking about this important zone, all right? The 110 zone, which is these previous highs. And if you notice, a price broke to the upside and stopped right here before it crashed. All right. And of course, the move down on the US dollar Japanese yen is also, well, the move down on the US dollar Japanese yen is also uh, created by that rally on the US dollar. All right. But in my opinion, this looks quite bullish. All right. And the reason that it looks quite bullish is because we we broke with this previous base, this green rectangle that I just put on my chart. This previous base is important. This entire uh, um, gray rectangle is a huge area of historic volume, and not only historic volume but also current volume being traded. And once we broke to the upside and we stopped at these levels, of course, we moved down. But if we don't break it with these lows, in my opinion, this still looks very, I mean, not very bullish, but in my opinion, it still looks bullish. Okay. The reason it still looks bullish is because we are making higher highs and higher lows. All right. We might have taken a buy trade right here, and we might be uh, on the red right now, but we are still moving in a bullish structure. We are making, I mean, if you look at this, if you start with the low, we make a higher high. From the low to this high, we made a higher high. Then we moved down and we made a higher low, and then we moved up and we made a higher high, and now we are moving down making a higher low. So yeah, we are still in a bullish structure, and unless we break with the previous low, we are still in a bullish structure. It's going to be hard for us to break. I mean, for price to break above it and continue with our idea, or the idea that we had yesterday, and that we still have today, for a reversal at these levels. Let's go to the daily, and let's have a look at what has happened here. I'm going to zoom in on the chart, and if you look closely, I mean, we didn't quite get to the 108.80 level, which is these lows right here, but this structure is, in my eyes, a reversal structure unless we break with these lows. So we might have been a little premature on the buy, but with good risk management and of course looking at the structure that we are trading in right now, this is still valid. If you have any questions, or if you want me to look at any other asset, just type it on the chart on the chat, and I'll be more than happy to do so. Again, the other asset that I want to go through is crude oil. Matthias K is a um, um, uh, I'm sorry. Yeah, Matthias K is the one that showed me this buy opportunity in crude oil. Uh, in all honesty, I didn't take this buy because price was trading at around 62.80 when I saw the opportunity. And when it retested the 60, 64, 60, 65 level, I was away from my charts. But if you look closely, let me just zoom in on my chart. This level held perfectly. All right, this level held perfectly. And right now, we are testing this previous base, which is the level that we pointed out yesterday. All right, and if we break above this level, if we break above this previous level, we are definitely going to be testing these highs at around 66.30. Now I'm going to zoom in again, and if we test this previous high at around 66.30, we might get a continuation to the upside above, of course. But what I'm looking at is because we already, or I already missed this buy opportunity at this support zone. So what I'm looking at, or what I'm looking for, is a break above the second green level, which is the previous base, and a break above the previous high. If we break above the previous high, we are going to get some momentum, some bullish momentum. But again, momentum traders take profit very fast. So I mean, if we break with this previous high at around 66.30, and after Momo traders start to take profit, we might we might have a pullback to retest this zone. All right. And if we pull back and we retest the 66.30 level or this previous high, this is going to be a great buy opportunity in crude oil for a retest of the 74.50 level or this area of supply. All right. So that's my view on crude oil. And again, this is just what I would do if this actually happens. Okay, because we don't know what's going to happen. No one knows what's going to happen. And if you ever hear someone saying, the price of crude oil is going to be at 100 in per barrel in 6 months, that person is lying to you, because what he's really saying is that he knows future auction, and no one knows future auction. So if and that is why I use if a lot. If we break with this area, and if we break with this previous high, and if we retest the broken previous high at around 66.30, this would be the zone that I would be looking for a buy opportunity, because that is the zone that is going to give me the best risk to reward scenario. All right. And this game is all about probabilities and simple math. um, if we start chasing this move, just imagine that we chase this move and we buy right here. We we are talking about 36 pip yeah 36 yeah 360 ticks risk for a 292 tick profit. So the risk to reward by chasing this move right now completely sucks. But if we wait for this scenario, that again, I don't know if it's going to happen, but if price rallies, breaks, and retests, it's going to give me a possible reward of 800 ticks and a risk of about 22 ticks. So that is the difference. Even if we take that this buy and price breaks below and stops us out, it really doesn't matter, because we are taking a 1 to 4 risk to reward scenario. And if we take this same trade and this same scenario, over and over and over, in the long run, we are going to make money. So I don't focus on one single trade, I focus on the setup per se. And well, that's about it on today's daily edge. And one last look at gold. Um, just take a look at the hourly on gold. I mean, that retest on the trend line, a retest, and now we are rallying. If we break above, hopefully, hopefully when we, because I'm already in a buy position, but right now I'm at break even. It doesn't matter. But when we break and if we break above the 1288.80 level, we are definitely going to be testing the 1294 level. It's not definitely, but the probability of gold testing the 1294.50 level, if it breaks with this high at the 1288 level, is very high. And because we are looking at a buy, and because we are already in a buy position, we are going to be at least taking 1/3 of our position off right here. All right. There's no questions. Again, thank you for joining me, and I'm doing this every day, and if you have any suggestions about the Daily Age shows, feel free to email me. And if you are not I mean, I think you are a premium subscriber, but if you're not, I can give you a 1 month trial. But I really do think you are. So thank you for joining me, and I'll see you on Monday, guys. Have a great, great, great weekend.